Good morning, good afternoon, and good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the CEO of Zopa, Jaidev Janardana. Great to have you with us.
Thank you for having me.
Okay, so before we get cracking, let's learn a little bit more about Zopa. So Zopa was, I think, one of the inventors of peer-to-peer lending. You're now a proper bank. Do we call you a neobank? Or because you're profitable, maybe we should call you something else?
Yes, so we have had a different approach than most other neobanks. Let's call me a digital bank. Might be a best way to describe us. Yes.
Okay, and just tell us a bit more about, perhaps how you differ or how you're similar to the other digital banks out there.
As you mentioned before, we started life as a peer-to-peer lender, and thus when we started to go into banking, we felt the best areas to focus was to actually meet the borrowing and savings needs of kind of everyday people in the UK. We made that choice for a few reasons. One, you know, that's where we had a lot of capability. We had really built out a world-class lending machine, and we thought we could actually apply as a bank on a wider set of products. As a peer-to-peer lender, we were only doing personal loans. We could do credit cards, car finance, and so on with the bank. So that allowed us to apply our capability over a wider set of things. The second thing is, when you think about customers, the choices they make in terms of how they borrow, how they save, can actually make a huge impact to their finances. So we felt we could actually play a much more important role in their finances, and it has become very true now, particularly given the cost of living crisis. And thirdly, this was unfashionable then, but very fashionable now, is the best way to make money in banking is actually to help customers lend and save, or borrow and save. And that's why as a bank, I think as compared to a lot of other neobanks, we were far quicker to get to profitability. We were hitting months of profitability within less than kind of 3 years of launch, which is far shorter than many other neobanks out there. And now that we've established our presence, now have 1 million customers, about 250 million in revenue, are profitable. We are now looking to expand beyond borrowing and savings as well, into current accounts, into helping people invest and so on. So, but we felt to start from borrowings and savings was the best place to start.
And you recently raised a second chunk of £75 million. To help with that expansion, presumably?
Yes. So, in fact, we have raised 150 million pounds this year in two chunks of 75 million. That is actually for a different reason. So we are a profitable business, and the expansion into new products we can actually fund ourselves. But what we are seeing is in the world of the cost of living crisis that we live in, people are really keen to find kind of responsible, fairly priced, easy to use credit, and they are looking for that digitally. Thus, the demand for our products, personal loans, credit cards, has really increased quite a bit. And as the balance sheet of the bank grows, because we are actually getting on new customers at good pace, we need regulatory capital to actually support the growth of that balance sheet. So those raises were purely about actually raising the required regulatory capital for the continued growth of our lending products.
Okay, so although it was regulatory capital and not, let's say, call it growth capital, the assumption is presumably that this may bring you closer to an initial public offering at some point. Is that a fair assumption?
So, from our standpoint, we do think that public markets and being public is a longer term kind of destination for the company. And I think we are in the journey of building Britain's best bank, and we think that will be public. But we are in no hurry. Ultimately, we want to make sure that the public markets are receptive, are in a good place, have enough liquidity to support a story like ours. And currently, unfortunately, that is not the situation in the UK public markets. So, as a company, we might or might not, we are actually very ready. We feel it's better for us to wait for a better economic outlook. In the meanwhile, I think we are very lucky that business is performing very well, and we continue to grow, and we have very supportive investors who can actually fund that growth. So, not in a hurry to get there, but as and when the markets are ready, I'm sure we'll be ready as well.
Okay, so we've heard about Zopa. Let's now learn more about Jaidev Janardana. Jaidev, you were born in southern India, I was reading, and your father, I also read, was a businessman, but I think in your own words, wasn't the best entrepreneur. What did you learn from your father about running a business?
I think one thing that that I have incredible amount of respect for him was very resilient person. So in his efforts, and he started on his dream of entrepreneurship. Actually, relatively late in his life, maybe in his mid 40s, uh, and he was and he faced many reverses through that time. But he was incredibly resilient and really kind of kept a lot of that uh, stuff onto him and was still able to perform and function in places where I would have seen many other people not being able to. And I think one of the things I learned from that is, how do you find that resilience? The second thing is, business, something that I expected was that the path from A to B in a small company in an entrepreneurial venture is never straight, and it'll have its ups and downs. And I felt, having seen him go through some of that, I was better prepared for it. Uh, and often things, the best laid plans do go awry, despite of in spite of nothing to do with you. So that was, I think, one of the learnings that I had from him. The thing that I probably figured out how not to do things was, I think, being more planned, being more considered, actually being prepared for stresses, even if you don't know where they're coming to come from, or reverses, or shocks, be that COVID, be that the invasion of Ukraine, and so on. How can you actually prepare a business to be resilient to those things? I think that's something that I kind of learned from observing that. And the other is actually to build a strong team, so that it doesn't have to be all on you, and you can actually rely on people who are along with you on the journey, buy into the dream, and can really help you through those moments of time. And I've been very lucky to have a team that has been on that.
And I guess when you're at Capital One before
Yeah.
Zopa, learning this, resilience and planning ahead really came into its own,
Yes.
because you kind of you had a pretty big hand in saving Capital One from calamity. Is that fair, or am I not giving you enough credit or giving you too much
That might
credit?
be giving me too much credit, but I think
Okay.
I can explain what happened. So I think I came. I was more for. I moved to the UK, and so the place where I had, I think, a more instrumental role to play was in the UK business. So I moved over to the UK in late 2007 to manage credit risk for the UK business, and that's when the financial crisis was starting to ramp up. And I think where I and my team can claim some credit was I think we were one of the first to anticipate, where a lot of the UK bankers were still saying that, oh, this is a US thing. We don't have subprime mortgages out here. There is no contagion. Don't worry. To saying, actually, no, there are a lot of interlinkages, and we should thus be prudent. And I think we were probably, if not one of the first kind of banks to really prepare for that upcoming recession, which means we cut back on a lot of our new lending. We were preparing for customers going into arrears, and thus when the crisis actually happened, we were, I think, relatively unscathed, which also meant that actually on the back end of it, we were one of the first ones to be able to actually go back into growth, because we were not dealing with existential issues. We were dealing with more challenges, but more of a lesser degree, and really about how do we support customers through those difficult times, rather than worrying about capital and liquidity of the bank. And of course, that's the role I played in the UK. I must say that I think that's one of the things I learned from the Capital One leadership in the US as well, was that they had a very similar mindset about being prepared for the worst, and really understanding how things can go, stress testing things far ahead of when regulators were expecting us to do those things. And I think that's the culture that I have tried to establish in Zopa as well, which is, while, for example, as a bank, we're not still given our size, not expected to do a lot of stress testing, we do push ourselves to do that almost to a degree that much larger banks do, so that we are prepared for stresses and issues if they were to arise.
And just a short question to finish this section off. If you weren't working in finance or CEO of Zopa, I mean, did you have any other ambitions? I don't know, to be an astronaut or to be a ballerina or something. Like, what would you be doing in your kind of dream
Yeah.
career if you weren't working where
So
you are
when I
right
was a
now?
child, I really wanted to play cricket. and then later tennis for a living. I mean, I still am passionate about sports. So if today I quit to be a CEO of a bank, maybe I'd like to be a sports analyst, maybe crunching some data around sports, or writing about sports. That's what I would do probably.
Okay. I guess growing up in India, there was probably less competition to become a professional tennis player than to become a professional cricket player. I'm just assuming.
That is
So,
very true, but it was also far less well remunerated. So
right.
yeah,
Fair
yeah.
enough. Okay. So look, a key part of this interview is to get your take on the future of finance. But first, we're going to take a very quick break, after which we're going to continue our conversation with Zopa CEO Jaidev Janardana. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. And now, Jaidev, let's talk about the future of finance. So, start off with a nice, easy one. How's artificial intelligence going to change finance in the future?
So I think if you think about artificial intelligence, predictive AI has been used for a long time in certain aspects of financial services. And for example, at Zopa, we were one of the leading proponents of using predictive AI. So this is, figuring out what is the probability of someone in defaulting in if they take a loan, probability of fraud, which has been widely used by the likes of Visa and Mastercard. And at Zopa, way back in 2015, we implemented our first generation of predictive AI models to automate credit decisions, and that has been a huge part and a huge uh, s- uh, it has been instrumental in the success we have had in actually building a great lending business that actually delivers great returns and great and gives customers better value than they otherwise would get. So I mean, I see that the more forward-leaning financial services firms like us have been using predictive AI for a long time. What has, I think, captured the imagination of people now is the generative AI, which can talk and interact and so on. And I see that as probably actually less revolutionary for financial services, but more revolutionary for all of us in some ways. So, and that's a lot of productivity enhancements for all of us. Be that someone who's writing code, be that someone like me who just wants to find out something new, or write a memo to the board. Often you can get the Gen AI to kind of write a first draft. We were actually submitting a bid to acquire a company, and we got Gen AI to actually write the cover letter for us
I was going to say, I
giving
hope you check
specifics.
it afterwards,
Yeah,
just in case it kind of
yeah,
makes up a figure or
yeah,
something else
without
like
giving them
that.
any specifics, saying we want something like this, write one, and they would give you a good template, and then you can kind of work on it. So there is a lot of productivity enhancements that happens. I think customer service is another place where I think we can give more human-like customer service, and I think we've been again using chatbots there for a long time, and what we see is that customers are far more satisfied with them because they are more precise and to the point. And in fact, recently I read some research that said that actually customers found when talking to doctors or clinicians that bots to be far more empathetic than doctors or clinicians. So I can feel that we can actually create a more human interaction there. Um, but I think those things are a bit further away. So I think when I look at Gen AI, and we have been playing it for a long time, I think it kind of works, but not all the time. So I feel uncomfortable actually putting it in front of customers without, to your point, that check. So right now it does help us almost produce a first draft, but then we have to still have that human interaction, which then I think takes away some of that. While it still is a productivity enhancement, it takes away all the benefits. But I can see in 3-4 years it'll work to a far higher degree of certainty, and at that point in time, I think we can really realize the dream of having your individual investment advisor, having your individual financial advisor that is actually through AI that you can interact with, and actually taking a lot of stress of people off them of how to manage their money. I think that will be the dream, but I still feel that's about 4 to 5 years away.
And what should regulators be doing about AI in financial services?
I think they need to be focusing on consumer outcomes and not necessarily on how they are being delivered, so to speak, right? So, of course, there are data privacy and all those concerns, but particularly in the EU and the UK, we have GDPR that protects that, and I think sometimes we hold of machines a higher degree of almost performance expectation than humans, right? So human processes, human decisions, human judgments has been seen repeatedly that when you have to make many of them, they are prone to errors. If you had a good lunch, then you're going to be more likely to be kind of more generous than if you had a bad lunch. And thus, I think what as regulators should think about is that as compared to some of the best in class human operations, when is AI starting to deliver better customer outcomes? And if it is, then I think they should be enabling and supporting that. And I can see that in many places that is the case. So, for example, in consumer loan underwriting, there's no question that AI makes far better decisions than humans, and thus regulators have been more accepting of that. And I think we need to apply the same standard: is not judge it against perfection, but judge it against what's the best human outcome that is possible. And if AI is delivering better than that, then we should be encouraging that.
Looking at fintechs in general, we're still seeing, the bloodbath hasn't ended really in terms of valuations. Things have yet to recover. It's quite hard for fintechs to raise money if they haven't raised enough, or the valuations are going to be, at a much lower level than before. You're profitable. When you raise capital, it's for regulatory capital. It's not because you need it to grow.
Yeah.
Do you still think that there are some, whether they're neobanks or other fintechs out there, are there many that are still in danger, that are going to fall by the wayside, that they're not out of the woods yet?
Yes, so I think as I look at fintech as a whole, I think that it's probably good to have two perspectives. One is the short to medium term, which I think your perspective is right, that there is uncertainty out there, investors are skittish, and we expect that to continue given that geopolitical situation, uh, in the Middle East, all the political wrangling that's happening in the US, an election coming up in the UK. So there is a lot of uncertainty. So companies are going to struggle to raise capital, and as a result, some might fall by the wayside. I'm also hoping that because in a lot of cases there is some great products, great ideas that can be actually consolidated, and thus fintechs can get together and emerge stronger as a result. But if you take actually the longer term perspective on this, banks still struggle to innovate. They still struggle with their technology. They still have kind of regulatory challenges that they need to kind of get over. And consumers increasingly want a more digital, instant, quick experience. And I think fintechs structurally are far better at delivering those. So if you take a more longer term perspective, I think this, you know, be that the 18 months, 24 months of uncertainty will pass, and and there is a huge opportunity for fintechs to make customers' lives better. I was reading somewhere that the profit pool of financial services is about 2.4 trillion a year. Fintechs have like a percent or two of it. So if you take that longer term perspective, there is just a lot more for us to go.
You're based in the UK. I'm sorry to mention the B word, but obviously since Brexit, there's been, concerns about the UK and certainly London losing its preeminence in finance and in fintech as well. Are you optimistic about the British economy? You're happy where you are, and that's the best place for you at least to be?
So I think I do separate the outlook for the economy versus the outlook for the company, because I think there are some differences. I do feel that the UK does have some structural challenges, which, without political will, uh, we will have some, uh, we'll take some time to get out of it. Even if we had the political will, I think the outlook from a growth standpoint for the next 2 to 3 years has to be muted, right? Given the fiscal constraints we have, given some of the productivity challenges that the UK has had, given the limited investments we have made in infrastructure. So, given all of that, I think we have to accept that the next 2 to 3 years, the UK growth will be muted. But the UK is a great country. It has reinvented itself many times. So I'm very confident that if we take a longer term view on this, again, the UK will be back on growth. But for a company like us, the current UK environment, while somewhat challenging, is actually still an incredibly promising environment, right? So what the cost of living crisis has done, as I said, is customers are far more minded to look for certainty, to look for value, to look for speed, and to look for places that they can trust. And I think Zopa's proposition, which has been about delivering kind of great returns on their savings, which in a world of inflation is incredibly important, or fairly priced credit where customers can trust the service that comes back in, has become very relevant, and that we can see as the growth that we have had. So we have been more doubling revenue for the last couple of years. And I think if I look forward, I think we can see there is strong customer demand that will continue to drive 30-35% growth. So for us, we still see this as a great place to grow. We still feel that we can make a big difference to the UK consumers. And the data environment, the regulatory environment is still very supportive for fintechs like us to grow. So while the UK economy may be a bit muted in the short to medium term, prospects for fintechs like us are still incredibly strong.
Okay, so time now for our round of rapid fire questions. Are you ready?
Yes.
Great. So I've got 90 seconds. I did have 90 seconds on my clock on my phone. So once we run out, we will stop and we'll try and get through as many as possible as we can. And just one word answers is all I'm after. Away we go. What fintech segment has the biggest potential in the next 5 years?
Consumer lending.
What is the biggest pain point in your everyday financial life you'd like to see resolved?
Fragmentation.
Do you think we're at the beginning, middle, or end of the fintech wave?
Beginning.
Do you have a metaverse strategy?
No.
Do you think that regulators in the EU and US have kept pace with all the new possibilities and behaviors in financial services?
No.
How would you describe NFTs? A scam, B, an interesting concept, or C, part of the future that we don't want to miss out on?
Interesting.
Have you personally ever invested in crypto?
No.
Are physical points of sales part of the future of finance?
Yes.
On a scale of 1 to 10, 10 being the most likely, 1 being the least likely, how probable over the next 10 years is it that one of the neobanks will be as profitable as a top-tier legacy bank?
9.
That central bank digital currencies, CBDCs, will become a mainstream reality in the US and EU?
6.
That you'll be able to open a crypto account at a top-tier bank?
3.
SWIFT will still be the main tool for transferring money around the world?
7.
That a new card-based rival will emerge to challenge Visa, MasterCard, Amex, etc.?
9.
And that we will see a top-tier bank or insurer bought by a fintech?
7.
Amazing. I think you are the first person ever, or maybe the second, to get through all the questions before 90 seconds. But that, I'm afraid, is the end of that round, and we are out of time for our conversation overall. So I really want to thank you, Zopa CEO Jaidev Janardana, for joining me today. Thank you so much.
It was a pleasure. Thank you.
And for everyone watching, we will be back again next time with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on Twitter at Paris Fin Forum. That's all for now. See you next time. Bye-bye.